Hello everyone. In this video we will be discussing the topic of how to identify and select good stocks for investment. Investing in the stock market can be a challenging task, especially for beginners. But, by following certain guidelines, one can make informed decisions and minimize the risk of losses. In this script, we will discuss what good shares are, how to identify profit-seeking stocks, how to select good stocks, and the procedure to screen good stocks. We will also provide some examples of good stocks in the Indian market and foreign market. Define good shares. Good shares refer to stocks of companies that have strong financials, a competitive advantage in their industry, a good track record, and potential for growth. Good shares have the potential to generate consistent returns for investors in the long run. How to identify profit-seeking stocks. To identify profit-seeking stocks, investors should focus on the following factors. A. Financial health. A company with a strong financial position, high revenue growth, and profitability is likely to generate good returns for investors. B. Industry analysis. A thorough analysis of the industry in which the company operates can provide insight into the company's potential for growth and profitability. C. Competitive advantage. Companies with a competitive advantage, such as a strong brand, innovative products, or low-cost production, are likely to outperform their competitors. How to select good stocks. Once an investor has identified profit-seeking stocks, they should consider the following factors to select the best stocks. A. Valuation. The price of the stock should be reasonable in relation to the company's earnings and growth potential. B. Management quality. The quality of the management team is critical to the success of a company, and investors should assess their track record and ability to execute the company's strategy. C. Risks. Investors should evaluate the risks associated with investing in a particular stock and ensure that they are comfortable with the potential risks. Selecting a good stock is a problem because there are many factors to consider and the stock market is inherently unpredictable. Some of the factors that affect a stock's performance include the financial health of the company, its management team, its competitive position in the market, and overall market conditions. Even if an investor carefully analyzes all of these factors, there is still no guarantee that the stock will perform well. The stock market is influenced by a wide range of unpredictable factors, including economic conditions, geopolitical events, and market sentiment. Additionally, there is always the risk of unexpected events such as natural disasters, political turmoil, or sudden changes in consumer behavior that can impact a company's performance. Furthermore, the stock market is constantly changing, so even if a stock appears to be a good investment today, it may not be a good investment tomorrow. As a result, selecting a good stock requires ongoing research, analysis, and risk management. Procedure to screen good stocks. Investors can use the following steps to screen good stocks. A. Identify the criteria. Decide on the factors that are important, such as financial health, industry analysis, and competitive advantage. B. Evaluate stocks. Use financial ratios, such as P/E ratio, P/B ratio, and ROE, to compare stocks within an industry and identify those with the best financials. C. Conduct fundamental analysis. Analyze the company's financial statements, management team, and industry trends to determine the potential for growth and profitability. Examples of good stocks. In the Indian market, some examples of good stocks are A. Reliance Industries, a diversified conglomerate with strong financials and a dominant position in several industries. B. HDFC Bank, a leading private sector bank with a strong track record of profitability and growth. In the foreign market, some examples of good stocks are A. Apple Inc., a technology giant with a strong brand and innovative products. B. Amazon.com Inc., a dominant player in the e-commerce industry with a strong track record of revenue growth and profitability. In conclusion, investing in the stock market requires careful analysis and evaluation of several factors. Identifying profit-seeking stocks, selecting good stocks, and screening good stocks are crucial steps to minimize the risk of losses and generate consistent returns. By following the guidelines mentioned in this script, investors can make informed decisions and maximize their chances of success.